Good afternoon, ladies and gentlemen. Welcome, and thank you for taking the time to join us in this lovely afternoon. My name is Chen, representing International Department of Nama Futures. In the next hour or two, I will be your host and accompany you to have an in-depth journey regarding QFII with several of our speakers. As you may already know, QFII policy has been announced to change to include futures and options by regulators since the September of 2020. However, 2 years later, as of today, everyone is still waiting for the okay to come out. In fact, if you have attended some of our previous QFII events before, you should know that we have some similar QFII events like this one. But what makes this one stand out from others? Well, given the fact that so many things has been happening this year globally and domestically, we have seen that the China regulators has been quite active in terms of losing the restrictions and infrastructuring the system. If we look back to this year, you will realize that several challenges has been accomplished, including the launching of CSI 1000 stock index futures, including ETFs in Stock Connect, announcing internationalized contract will be available in Guangzhou Futures Exchange, and most importantly, the launching of China Futures Law. So all these movements prove that the attitude of the regulators is still quite positive. So let's keep finger crossed and see if any good thing is going to happen in the rest of the year. Today's webinar is co-hosted by DBS Bank China, who has a strong partnership with Nama Futures for many years. Besides, we're honored to have Ms. Ying, representing Han Kun Law Office, to give us an update from a legal perspective. Well, just a heads up, there will be 3 speakers today and no QA sessions until the end of the webinar. So if you do have questions, please feel free to bring it up in the chat room, and our speakers will answer that in the QA session. First, please allow me to introduce Mr. Ian Jin, the Executive Director and Head of Securities, and as well as Global Transaction Services of DBS China. Ian is responsible for the bank's custodian and agency services, business development side, and product development. Ian has over 24 years of banking experience, with more than 11 years with DBS Bank. Prior to DBS, he has worked for top global banks like HSBC and Barclays. And Ian is going to give us a welcome speech. Over to you, Ian.
Thank you, Chen. Thank you, everyone, and good afternoon, ladies and gentlemen. My name is Yan Jin from DBS China Securities and Fiduciary Services Department. This is the department that provides and is responsible for helping foreign investors accessing to the China capital markets via the QFII and the CIBM direct route. And DBS is really honored to partner Nama Futures in this event, and obviously thank Ms. Yin from Han Kun Law Offices to share her views and to provide insights in the China derivatives market under the QFII scheme. In this webinar, we will strive to provide you with an overview of assessing the China capital markets, particularly focusing on investing in the derivatives market. As what Chen mentioned earlier on, our panel of speakers will touch on key topics covering the below areas, such as opportunities and implications of the new QFII policy that will bring to the China's derivatives market, different ways to participate in the China derivatives market through QFII route, services a QFII custodian like DBS provides, a compliance risk a foreign investor needs to be aware of, how QFII holder manage cross-border cash flows, and onshore taxation. With the gradual opening of the access to the wider asset class in the QFII under the QFII scheme, we are of the view, at least from DBS as a QFII custodian provider, there will be greater momentum for QFII application, as well as foreign investors launching new offshore products investing via this route. So with this, I will hand over the session to the panel of experts, which will share more insights with you. Thank you very much.
Thank you very much, Ian. We look forward to having a lot more collaboration with DBS and QFII and other areas in the future. All right, now let's welcome our first speaker, Mara Wang, the Senior Manager of International Department of Nanhua Futures. Mara has over 10 years working experience in international finance and fintech industry. She is a recognized expert in providing comprehensive cross-border financial services, specializing in Chinese international futures, QFII, WFII, overseas intermediary, as well as asset management. Mara is going to introduce emerging opportunities for QFII to participate in the Chinese derivatives market. Mara, if you're ready, the floor is all yours.
Thank you so much. Let me share my slides at first. Okay, here you go. Hi, ladies and gentlemen. Thank you so much for making the effort to join us today. My name is Mara Wang from International Department of Nanhua Futures Company. Today, I'm very delighted to give this presentation regarding to emerging opportunity for QFII to participate in the Chinese derivatives market. In the next 20 minutes, I would like to introduce from these 5 different topics because I will focus on the derivative market. So after the DBS areas and also Ge Ying from the law firm, they will have the wild speech from the bank side and the law firm side regarding to the QFII. At the beginning, I would like to introduce for the landscape of Chinese derivatives market to show how fast the development and how big the diversity it is. From the first bar chart, we can see the China in the global position regarding to the trade volume, we already reach nearly half of the Asian region trading volume. Also, it's almost more than 17% in the world. The second table is about the global trading volume ranking from the FIA in the first half year in 2022. How much we trading based on the top 20. So we have the agriculture, 16 products in the top 20 and 14 of the top 20 in metal and 5 of the top 20 in energy. In the end, 3 of the top 20 in the previous precious metal. The third one is easily can find out in this recent 21 years, how big growth of the development of our trading volumes of futures in China. And the last one shows the diversity. The numbers of listed products in the Chinese derivative market is already reaching 99, including 87 in the commodities category and 12 in the financial category. When we're talking about the Chinese markets, it's very important part is about the retail investors. So from the bar chart, we can easily find out from 12 years ago, there were no foreign investors in the market yet, but the retail investor is much more than the institutional investor. The situation started to change in 2013. The foreign investors started to come to participate little by little. Then even now, in the 2020, the percentage of the foreigners still less than 10%, but we still have more than 20% as a retail investors. So that's why for a professional international investor, a market that is dominated by the retail investors and the less advanced domestic participants always presents an attractive opportunity. So when you have the big picture about the Chinese market, you find a lot of opportunities, but how can we participate? Except for setting up a Chinese company immediately, you have 2 main ways to enter. In the roadmap, the blue part is inside of China and the orange part is out of China. So as overseas investors, the first best choice is international contracts. You can choose a broker in mainland China, for example, Nanhua Futures in this map, or you can choose a qualified overseas intermediary out of China to access the Chinese international contract. Now we have 7 futures and 2 options open to the global market. The second one is QFII. QFII is qualified foreign institution investors. So thanks to the announcement in the end of last year, now the commodities futures and options, stock indexed options already in the new investment scope, including the stock indexed futures you already can trade now. Then we are willing to wait for the detailed rules to come out. Then you not only can trade by yourself immediately, you also can invest some products like a private fund or public fund related to the derivative strategy. So now let's add the WFI together in the comparison. WFI means the Chinese company totally controlled by the foreign investors. So let's compare these 3 different channels, which one is the best for you, or you want to combine them together for your long-term strategy. The first one is QFII. So the QFII is always financial institutional and also the trading firm's favorite choice, because now you can trade the stock, bonds, and in the future, you can choose stock commodities future. So you can combine them as a total strategy to like set up the funds, etc. A lot of things can do. And at this moment, you can choose to trade the stock index futures for hedging, compare with your stock strategy here. Then the second one is international contract. As I said, you can choose overseas intermediary, for example, Nanhua company in Hong Kong, Singapore, and UK. You not even need to open like a non-resident account in the bank, because you can just use your global bank account to trade the international futures inside of Chinese market. At the meantime, you can choose to trade like in other main exchange market together. But the problem here is we only have 9 products in the market now. So here is a bit limited for the investment scope regarding to the international contracts. So that's why some foreign companies, they choose to set up a Chinese company inside of China, then they can benefit from all the full range of the products in the futures and options market in the different exchanges. But here we need to be careful. Then you have a Chinese company, it means you have to face the Chinese regulator and need to deal with the tax issue. So for this, later in from the Han Kun Law Offices, she will give us some experts for this part also. And here, if you are a financial institution, you have a WFI, then you can apply for the PFM. Then you will have more strategies can play here. If you have the PFM, which we call the private fund manager license, then you even can do the fundraising inside of China. At the meantime, once commodities futures detailed rules come out, you even can get the money from outside from the QFII fund. So the scope will be much wider than now. We introduce all these details because we want all the clients who are interested in Chinese market get real prepared, because now we already have the announcement, and as we know, the exchange market already submit all the detailed trading rules to the CSRC in the beginning of this year. So we're supposed to have it like any day in the future. So it's better to get well prepared. So when this commodities future not come out yet, at this time, you still can trade the stock index futures via QFII, compare with your stock strategy. Now we have IF, IH, IC, and IM. IM means CSI 1000 index, which just launched 1 month ago. So let's see the margin rate here, 8%. It's quite low. So just take the time and the benefit from this and do more things related to the stock index futures for hedging to have fun to try the QFII at this moment. Except for the future stocks index future. So here we would like to give some insights of the new QFII policy regarding to the existing product you can trade now. The first one is international futures contract. Why we bring the details here? Because actually all the Chinese products would already open for the foreigners. The trading rules is exactly the same like for Chinese traders. For example, the funding requirement, the trading experience requirement, and even with the trading hours, margin, and maximum opening limit, the Chinese traders and the foreigner traders, you have exactly the same requirements. So we assume for the QFII opening more products, it's the good time to learn more about the Chinese existing trading rules to get prepared. We can see here the trading hours. We have the night trading hours, which is also a special part in the Chinese market here. And we put the related products in the other exchange market. We can do a bit arbitrage here. When we're talking about the futures investment, of course, the margin call is the most important part we always want to know. So actually, we are a bit special for this part for the calculation. In China, the risk rate is equal to position margin divided by the total account funds. When your risk higher than 80%, then you will get an early warning through your trading terminal. And when your risk reach 100%, then you will get a margin call by your phone or just get the message to ask you add the margin or reduce the positions. But the real situation, like not happened very often, you will keep the risk higher than 10%, 100% until the next trading day, until the 2:30 p.m. Then you have to face the forced liquidation. But this one, like usually, will not happen because our risk management department would check and feeds back the situation for the clients in every real time. But here, pay attention, the night trading is settled on the following trading days. For example, if you get the margin call in the end, like in the night of the Wednesday, then we will calculate on Tuesday daytime, you will face the last forced liquidation on like Friday. So you have 2 days to manage for the situation. And if you are professional investors, the second thing you will care about is IT solution. Nanhua actually is one of the best IT providers in mainland China. As we know, we connect a lot of majority of the IT providers here. So for example, Bloomberg, CQG, TT, eSigning, etc. And we also have comprehensive service for the co-locations client. We set up a lot of server rooms nearby the exchange market to offer the trading interface and market interface here. Actually, 2 days ago, I visited one of the exchange markets, want to get a bit more insights from the internally to share with you here today. So they told us the most important thing as our foreign investors care about is not about the price, is not about the speed. The thing is, people want to really understand the Chinese trading rules. So that's why the premium service is one of our unique selling point here. We have our English daily service. We have comprehensive trading notice, and we will help you to understand every single exchange rules. And we will send you daily settlement report in English and Chinese, and no worry for the like margin calls, we will help you to handle it in real time. Except for that, in China, the Nanhua Research Institution is the first research institution in futures market. So we have the confidence to share massive of onshore and offshore research report to our client, including all the details important here. So from this page, we would like to share what we can help you is we set up the bridge, help you to understand the Chinese more. And at the meantime, during your trading, you can ask us any question and we will help you to understand the rules before your trading. So if you think about, okay, now I'm ready to enter Chinese market via QFII. So what should I do and how long time I need to take? So usually the process probably takes around 2 months because you have the pre-business communication. We need to help you to prepare the document to open the futures accounts. We need to help you to apply the hedging and the trading preparation. We need to do the IT docking and customize the reporting matching. Then you will have the live trading test. In the end, you will have the official trading. So that's why we always highly recommend our client offices, like do not wait in the end for the detailed trading rules to come out, because the document to open the futures account via QFII is always similar to different exchange markets. If now you come to open the account to trade the financial futures, or just open it now, then after, once the detailed rules come out, you can just send us the existing materials. Then you will be the first enters to trade the commodities futures market here. So don't lose time for waiting here. As we mentioned, from QFII, you can trade by yourself. Also, you can invest a bit of the products, like if you found something interesting. CTA is very good opportunity. So that's why when we're waiting for the QFII detailed rules come out, we prepared a lot for our foreign investors. Nanhua is very famous for their asset management service. We call it a fund matching pool, and we prepare a lot of good products in the pool waiting for the QFII open. Therefore, our QFII client can invest immediately. So what is the process here? Usually, we will talk to the client and quality investment advisor to match their needs, onshore or offshore. We can do both. Then we will design the fund products based on all the needs, and we can combine the capacity from the fund manager inside of Nanhua or outside of Nanhua. Then we will put a bit of our Nanhua prop funds to check the stability and the capacity of the fund. When we already have the existing historical data and the performance record, then we will introduce to our client. So from our department, you can access to Nanhua public fund, private fund, wealth management, fourth and overseas like fund. We have all the financial lessons for this like different fund setting. Here, I would like to introduce our Nanhua Commodities Index. Here, as we know, the Nanhua Commodities Index is the longest index in the commodities market here. We already have more than 16 years. So this is a benchmark for us, for clients to understand the Chinese commodities market here. So if you trade with us or you cooperate with us, we can share a lot of data from this commodities index for you. CTA here, we have different strategies and data resources and target trading frequency. We have, based on this, we have so many different kinds of CTA. So I just picked two to show the good performance in the history. If you have the interest in the CTA, we can set up the meeting to talk about it in details, and we can introduce the top traders in China market for you to design your product based on your needs. In the last part, I would like to introduce our company. So our company is the first A-share-listed futures company in mainland of China, and we have the largest number of overseas institutions to offer the variety of cross-border financial solutions. We have the sub-company in American, in Hong Kong, in Singapore, in UK, etc. And I also mentioned we have the first futures research institution in China. So obviously, we have the advantage related to the cross-border investment. The one of the earliest cross-border investment service team serving the QFII to participate in the stock index future hedging is from our team. We have 12 members who have the overseas study background and more than 8 years experience in futures industry. And we can help you to deal with the settlement issue. And because we are a shared listed company, so we fully guarantee for the safety of your funds. As we mentioned in the whole PPT, we can summarize it in 3 different solutions we are offering now. The first one is futures in Chinese international futures contracts. The second one is QFII and swap, because waiting for the QFII, some client outside want to do some trading out of the scope that 9 products we have in the international futures contract. So we will offer the swap solution here. And the last one is the setting up fund matching pool for the asset management service. And the last one, we want to repeat again for how many IT support we can have. This is really leads us become the best brokers in China, because we have TT, CQG, ATP, ESANI, API, and also Bloomberg. As we know, Bloomberg future tradebook futures, they only sign 3 brokers inside of China waiting for the QFII commodities details to come out. We are one of the 3 brokers in China here. Okay, so my speech will just stop here. Please let us know what else you would like to know. And if you need the slides, please tell us. And also in September, we will have another 2 webinars regarding to the overseas intermediaries, and also we will cooperate with BSO to talk about one of the international futures contract in details. Thank you so much.
Thank you, Mara. The speech was really helpful for people who want to get access to Chinese market about QFII. And please remain on the line. And just in case there were questions in the QA session. All right, let's welcome our next speaker, Iris Gao, product specialist of DBS China. She's an expert in the China capital market securities service area with more than 10 years experience in China QFII and RQFII business. Iris is going to introduce the process and custodian services for QFII and CIBM. Iris, please start up your session whenever you're ready, and I'm handing over to you, the host. There you go. Hello, Iris. Can you hear me? I think your mic was still in mute.
Sorry, some network issue. Can you hear me now?
Yes, I can hear you now. Please go ahead.
Okay. Good afternoon, everyone. I am Iris Gao from DBS China Securities and Fiduciary Services, and our team is responsible to make sure foreign investors like yourselves can access the capital markets in China through programs like CIBM and QFII. DBS is highly committed to China as a core market. We are one of the first foreign banks to incorporate in China since May 2007, with more than 15 years of operational track record. And we are the only foreign bank approved and licensed as Futures Depository Margin Bank by INE, the Shanghai International Energy Exchange. We also established a majority-owned securities joint venture with registered capital of renminbi 1.5 billion in China, further deepening our commitment to the Chinese capital market. As a rising custodian in China, we are heavily involved in local custody industry, and our professional English-speaking staff are well-versed in domestic and international banking standards to offer you the most comprehensive one-stop solutions. DBS China is also the first among all foreign banks in terms of award quality and quantity. So on this slide, we list some awards we won in recent years for your reference. Why you should choose DBS China Security Service? With the unwavering commitment to China, we always drive the innovation in industry. And we are the advocate for proactive dialogue with regulators on improving meaningful market access for our clients. Next, I will give you an overview on how you can access China capital market through DBS. I'll cover the access and the process. First, let's look at the history of China capital markets. QFII, the Qualified Foreign Institutional Investor Program, was launched in 2002 to allow foreign investor entry into China onshore market. Subsequently, more channels such as CIBM, the China Interbank Bond Market, RQFII, Renminbi QFII, Shanghai Shenzhen Hong Kong Stock Connect, Bond Connect, international futures contracts were introduced as the country opens up and allows more participation from foreign investors. The latest development is in September 2020, where QFII and RQFII programs are unified through the new QFII RQFII. Unified through the new QFII RQFII regulation. Entry thresholds are lowered, investment scope is expanded, and quotas are removed. Today, the unified QFII program is the most comprehensive access channel to mainland China. Let's dive straight into QFII's latest development and how DBS can be your partner in this journey. The fundamental question is, which channel or access should you as a foreign investor consider? Traditionally, Shanghai Hong Kong Connect and Shenzhen Hong Kong Connect is a common route. However, with the unified QFII, there are 3 points I would like to highlight on this slide why you should choose QFII. First, the unified QFII is more flexible than Stock Connect and Bond Connect. Both Stock Connect and Bond Connect is subject to quota, while unified QFII is not restricted by any quota. This is important when you consider the liquidity of your investments, the ease of accumulation or liquidation of your positions. Second, compared to Stock Connect, Bond Connect, the unified QFII has wider investment scope. We will go through the details later on. Third, under the unified QFII channel, foreign investors could access block trade, proxy voting, and IPO. Here, I'd like to highlight the IPO part, As we all know, many foreign investors are quite interested in participating in the mainland China IPO. Another advantage for the QFII scheme is there will be approximately 10 more trading days than Stock Connect, which is very important for index tracking fund manager. Many foreign investors, as we know, they should ensure the full accessibility to market during the volatile period. Besides, on the invest protection wise, QFII investors are protected by China Securities Investor Protection Fund, while Stock Connect transactions will not be covered by the Investor Compensation Fund in Hong Kong, nor the China Securities Investor Protection Fund. For another, you could trade Stock Connect through DBS Hong Kong. As far as we know, some foreign institutional investors prefer Stock Connect still because its trading, clearing, and settlement infrastructure is more similar to international practice. After hearing the why, let me quickly give you an overview of the key changes to the unified QFII. The main changes are consolidating QFII and RQFII measures and provisions, and relaxation on applicant qualification requirements, and simplify application process. Another is expanding investment scope. Also, remove the restriction on number of custodian banks, brokers, futures brokers can be appointed by the single QFII. And the last one is enhancing ongoing supervision. Next up is a breakdown of the expanded investment scope under the unified QFII scheme. On this slide, we could find the newly added investment marked in red. Under equities, the QFII investors could trade CDRs and they could do securities financing, margin trading, and securities lending, and also the options listed on the stock exchanges. Do note for options, the concerning exchanges will seek CSRC approval separately before it can be made available. Furthermore, QFII investors could trade shares on NEEQ, the National Equity Exchange and Quotation as well. Fund-wise, besides open-ended mutual funds, money market funds, QFII investors could trade private investment funds with underlying investments within the QFII investment scope. Fixed income-wise, QFII investors could trade bond repo as well. Here, please do note for bond repo, the concerning exchanges will need to seek approval from CSRC separately before it can be made available to QFII. Lastly, index futures are available and QFII investors can expect more financial futures and options listed on CFAX, and commodity futures and options listed on China Commodity Futures Exchanges, i.e. SHFE, the Shanghai Futures Exchange, including INE, BCE. DCE is Dalian Commodity Exchanges, ZCE, Zhenzhou Commodity Exchange. This will be an exciting space to watch as we all await for CSRC to approve commodity futures and more financial futures to be made available for QFII on the various exchanges. Here, I made a comparison table for you to learn more details about the difference between old QFII or QFII and the unified QFII. Under the old QFII scheme, the applicant shall meet various eligibility criteria. For example, the asset manager, insurers should have at least an AUM of USD 500 million. The securities companies shall have at least AUM of USD 5 billion and net capital of USD 500 million. And for the commercial banks, they shall have at least an AUM of USD 5 billion and a Tier 1 capital of USD 300 million. Under the unified QFII scheme, such criteria was removed. Thus, more and more applicants could participate in China onshore capital markets through QFII. For another, under the old QFII scheme, the applicant should only come from 19 markets, which is quite limited. But with the unified QFII, such restriction has been totally removed. Next, we'd like to highlight that under the unified QFII scheme, the limit on number of appointed QFII custodian bank is removed. The QFII could invest as many QFII custodians as they like, and of all the QFII custodians, QFII show up.
没有，就他有问题。
Could
有问题的就是他。
Sorry, Iris.
please help mute.
对，号码发你啊。
Let me just.
Hello, Iris.
Let's continue. Under the unified QFII, the QFII could appoint as many QFII custodians as they like. And of all the QFII custodian bank, the QFII shall appoint one master reporting bank. Another change we want to highlight is that the investment quota management has been totally removed. So the QFII could invest as much as they would like. Last change we want to highlight is that under the unified QFII, the QFII investor has the obligation to inform the master reporting bank of their respective FX derivatives position with different FX counterparties or the total amount of their FX derivatives positions. The master reporting bank shall assist supervising the QFII's total onshore FX derivatives positions to ensure the compliance of the principle of the trading on actual needs. Under the latest unified QFII scheme, the application process is also further streamlined. CSRC has committed to a shorter review period of 10 working days to decide whether to grant a QFII license. Please note previously it's 20 working days for QFII and 60 for RQFII. Application documents are much reduced as well. Instead of submitting a total of 13 documents, the applicants now only need to submit 7 documents only. And our team is able to guide you on your QFII application documentation preparation. We also assist the QFII to do the registration with SAFE, helping them open the QFII accounts so that they could start the QFII investment smoothly. Next is an overview of the implementation process for QFII, where DBS China is appointed the custodian. And on behalf of you, we will liaise with the various authorities within China. Based on our experience, the whole implementation process will take about 8 to 10 weeks. Step 1, appoint DBS as your QFII custodian. Step 2 will be to applying QFII license with CSRC. Step 3 being the registration with SAFE. Depending on what investments QFII investors will trade, we have listed 4 implementation scenarios on the right. For example, scenario 4 is for those QFII investors who would like to invest in futures. They shall appoint local futures brokers while opening QFII cash accounts, including the renminbi basic account, which require PBOC to approve. Then open trading ID with concerning local futures exchanges through the brokers. And the final step before they could start futures trading is to link their QFII cash account with their margin account with the local brokers. Here, I would like to highlight that for the cash account opening with DBS China, DBS Singapore could be leveraged in 2 ways. For one thing, as in-person witness is required, DBS Singapore staff could well support this. For another, some KYC CDD documents could be directly shared to DBS China if the QFII client is the existing client of DBS Singapore. No need for client to resubmit the duplicate documents, which is much more efficient. Next slide, let's take a closer look at the closed loop circuit for margin transfer for futures trading. In China, all futures related cash settlement are within a closed loop circuit. Step 1, after the QFII client funds cash margin for futures trading, the margin will be transferred from client's cash account to their onshore future broker's dedicated account. Next, step 2 will be the onshore local futures broker will transfer the trading margin to the onshore futures exchange so that the client could start futures trading or to top up their daily loss from daily settlement. On the reverse, step 3, the onshore futures exchange could transfer profit from daily settlement to onshore futures broker so that the broker in step 4 will transfer the profit to client's cash account. In the end, the QFII client could repatriate the principal and or the profit to their offshore account under the same name. Next slide is about the account structure under the unified QFII. On top of the renminbi basic accounts, the renminbi basic account is opened for license holder only due to the local regulatory requirement. The other QFII accounts used for renminbi injection should be strictly segregated from the accounts used for foreign currency injection. Here we would like to highlight that no fund transfer is allowed between these 2 sets of cash accounts. By the way, the purpose is to avoid QFII investor to do arbitrage on the difference between the FX rates for onshore renminbi and offshore renminbi. Thanks for your listening. And we will be more than happy to be your QFII custodian when you embark your QFII journey. And you could find our team's contacts in this slide. Look forward to hear from you. My part is over. Xiaoyu.
Thank you, Iris, for your sharing. And I apologize for the interruption. I truly did. And we all know that DBS is quite active recent years in QFII custody area. And I look forward to have a lot more cooperation with you guys in the near future, okay? Thank you very much once again.
Sure, thank you very much, Xiaoyu. Thank you.
All right. So our speakers have introduced what the opportunities are, as well as how they can be achieved. I'm sure you'll be curious about what type of legal protections there are and what kind of rules you should follow when inbounding China. Now, please allow me to introduce the last speaker of the day, Ms. Ying, the partner of Han Kun Law Office. She's a legal expert, a veteran on asset management and financial service in China, with extensive experience in representing international asset managers, financial institutions, central banks, and other trading platforms on multiple cross-border investment initiatives such as QFII, QD, QDLP, and all that stuff. She also had deeply involved in advising on legislation and regulation of China's asset management and financial service sectors. Hi, Ying. Thanks very much for coming. I know you have a meeting just now, and you may start your session anytime now. And just let me give you the host.
Yeah, sure. We can start now. Thank you. Can you see the screen now?
Yes, I can.
Yes.
Great. Okay. Well, although I missed the earlier parts, but I know that the experts from Nanhua and DBS has already given a very comprehensive introduction on, access to China's securities and derivatives markets via the QFII license. Especially I think from their perspectives, the cash management, the account structure, and also the various, derivatives and futures products, which are now available to QFIIs in principle. So from my perspective, I advise a lot of foreign investors in applying for the QFII license and also, using the license for their onshore investments in China. And more importantly, as a lawyer, although it may be a headache, but we have to remind our clients again and again that once they have the QFII license, they will be subject to certain PRC regulatory or compliance requirements on an ongoing basis. So pay attention to it. It's not a one-off deal, but rather an ongoing process. So I think we will quickly skip the first slides. The first one actually is an overview of the recent QFII regulatory reforms. I think the DBS expert has also covered this, so we will just skip it. But a fact that I would like to share here is that actually the QFII regulatory reform, the purpose of most of the reforms is to facilitate the foreign investors' QFII application and their investments under the QFII license. So from PRC regulators' perspective, they want to make the QFII program attractive again. Why I say again is because actually now, other than QFII, we have some other access channels to the PRC securities markets. For example, the Stock Connect, the Bond Connect, or CIBM, etc. We will also have the Swap Connect now. So there are some overlapped, investment scopes between QFII and the other access channels. So as a result of which, the foreign investors, they have more options to invest in the China markets. A metaphor that I would always use, for my clients is that, it's rather like going into a Chinese restaurant and you are now looking at a menu, which is getting longer and longer, but you need to, make your own choice depending on your own appetite and interest and know, which one is more suitable for your investment objectives. So the regulators' efforts to make the QFII program attractive again and convenient and more convenient have received very positive market reactions from the international investors community. So I would like to share some numbers here. In 2017, the new QFII license approved by CSRC is 13. So it's 13 in 2017. And then 2018, the number is 18. And 2019, the number is 21. And we know that the new CSRC's QFII rules took effect from November the 1st, 2020. So in the first 10 months of 2020, the total new QFII licenses approved by CSRC amounts to 26. And then what happened, after the new rule took effect, in the last 2 months of 2020, there are 45 new QFIIs approved by CSRC. And then in 2021, there's a record high number of 119 new QFIIs approved by CSRC. So it shows that the regulatory efforts to make the program attractive again is well received and positively reacted by the international investors. And more interestingly, if you look at the list of the the QFII club, right? Actually, there has been some new developments of the types of the license holders or the QFII applicants. If we look at the names before, there are many big name asset managers, the buy sides, etc. But now in recent years, we have also seen some, mid to small to mid scale asset managers and some diversified or alternative managers, including hedge fund managers, including the prop traders, etc. market makers. So I think that also shows, the PRC regulators, they are keeping a open mind, for the QFII applicants, and they welcome more specified or more diversified investors to the QFII program. And then I think I will quickly cover the key points of the new rules. I'm sure some of them are already covered in the earlier parts. Again, to make the application easier for the foreign investors, actually most of the hard requirements have been removed. For example, the AUM, the number of the minimum AUM requirement and the minimum track record requirement. And also now it has moved the restrictions on the countries and the regions. Right? So no discrimination at all. So all applicants from all over the world are generally welcomed. And I think, from a legal perspective, the account structure is also very important for the investors to make sure that their asset ownership is clear. So I think on that point, the PRC regulators have also made the account structure clearer, and they are facilitating, more types of, account structures. Another thing I would like to highlight here is the ongoing supervision. So although the regulators have taken, positive steps and, make efforts to facilitate the investments and also to make the entry to the markets easier. But I think at the same time, they have also emphasized, the ongoing compliance and the ongoing supervision from a regulatory perspective. If, for example, for the disclosure requirements, there is a so-called look-through requirement. The QFI's underlying clients, is also obliged to make information disclosures via the QFII license holder. And also, there is a provision in the CSRC's new rule that if upon the regulator's request, the QFIs shall report their offshore hedging positions. And also think the rules, they have specified some penalties on the QFIs and also the responsible persons. In case of any violation or non-compliance, and those penalties or punishments include the regulatory talk or some warning letters and the other rectification measures. So for that purpose, actually we usually will develop a so-called compliance checklist, for our QFII clients. On the checklist, we will set up certain the key regulatory requirements, including the reporting requirements, both on the ad hoc and on the periodical basis, and also the key trading restrictions or compliance requirements. For example, if you trade A shares in China, there are some key requirements that you need to be aware of. For example, the disclosure of interest, and the threshold is 5%. And there's also a so-called short swing profit rule. The threshold of holding is also 5%. and which means, while the threshold is reached, you cannot sell and buy the shares within 6 months or vice versa. And also, in China, at the exchanges level, we have the abnormal trading monitoring mechanism. And although the rules, they have set up some, abnormal trading patterns, but in practice, actually, the exchanges will also have some internal standards or guidelines, what types of trading will constitute abnormal trading. I think this requirement or regulatory aspect is especially relevant to the investors whose investment strategies involve quant trading, program trading, high frequency trading, etc. Because those trading strategies, by nature may cause more market movements while they trade on the PRC exchanges. Another interesting point to note is that while the application has been made streamlined and further simplified, but we also note that in the most updated application forms provided by CSRC, there have been some additional disclosure requirements. For example, in a new application form, the regulator will ask the investor to represent or explain whether their investment strategy involve program trading, or whether their strategy involves any shorting of A shares, any quant trading. And another requirement is that the application form actually includes a investment plan under the QFII license, which means you have to disclose to the regulators that how you would like to utilize your license, right? And also the source of funds, etc. Although the investment plan requirement is not a new one, but there is a new requirement there is a new express requirement that the QFIIs, they need to stick to their investment plans that are submitted to the regulators for the application purpose. And otherwise, they need to notify the PRC regulators in advance. Well, before the application forms are updated by the PRC regulators, it is it is not an express requirement. Although we have advised our clients, to follow this because, the regulatory spirit is that, when you submit, after you have submitted your investment plan, the regulator would expect you, to make the investments in compliance with your plan. So I think that that makes sense. Yeah, those are this slide actually lists out the key ongoing compliance requirements. Some of them I have just covered. And also on the trading compliance, also includes some market manipulation, insider trading, which are prohibited under the PRC laws. And that applies to all the investors on the markets, whether it's foreign under QFII license or it's domestic investors. And there is also a requirement of the foreign ownership limits. Actually, there are two types of limits under the QFII rules. The first one is the single investor limit, which is 10%. And that means any single foreign investor cannot hold more than 10% of a PRC listed company's A shares, and that's actually you need to consider some aggregation, for the compliance purpose, because as I just mentioned, now other than QFII, you have other access channels, so you need to aggregate your positions of the same company under various channels that you are using, QFII, Stock Connect, etc. So that's a tricky part. And then there's another limit, which is the total market limit. It's 30%. It means that all the foreign investors in aggregate cannot hold more than 30% of a company's shares, listed shares. That one, I don't think we need to worry about it too much, because the stock exchanges, they will send out some alerts, when the total holding reaches to 26, or I think it's 26 or 28%. Yeah. So in terms of futures and derivatives trading, I'm sure the Nanhua futures, they have covered this. Again, the regulatory status is that now in principle, the QFIs are allowed to trade eligible futures and derivatives products, which basically include all the commodity futures and options in China's commodity futures exchanges. However, we're still waiting for some further green lights from CSRC and from the exchange to commence trading. And another point I would like to share here is that actually, on a related note, China just passed its futures and derivatives law earlier this year. So this law took effect from August 1st this year, so just this month. And that is the very first, futures law in China's legislation history. So that's a big thing. And also interestingly, in the law, it is expressly provided that this piece of law applies to futures transactions, derivative transactions, and the related activities conducted within mainland China and also outside mainland China, which may disrupt the domestic market order or damage the lawful interests of domestic traders. So we note that this law has provided some extraterritorial effect. And of course, because this law is brand new, right? There's still a lack of real cases or precedents that. So I think it remains to be tested, or to be seen that how the legislators or the law enforcement authorities, they would apply or implement the relevant provisions. But it's very interesting. Well, another aspect I would like to quickly cover is between QFII and the onshore PFM. The onshore PFM refers to onshore private fund manager or onshore private investment fund manager. So the reason I would like to cover this is because one of the efforts that CSRC is making is to give the QFII as well as the onshore PFM more business opportunities. So we know that actually for some big international asset managers, they have both the QFII license and also they have set up their onshore private PFM entities. So CSRC basically allows the onshore PFM to provide the so-called investment advisory license to their affiliated QFII. And so I think that gives the onshore PFM more business. And at the same time, because the onshore PFM, as a private fund manager under the PRC law, they need to launch private funds. Particularly, they need to launch the very first private fund within 6 months after they are registered with the PRC authority. So the CSRC has allowed the QFIs to invest in the onshore PFM funds, and not limited to affiliated PFMs. So it means the PFM actually can use the QFIs money to resolve the seeding capital problem because some of the managers, they are new to the market, and the distribution is challenging, especially at the initial stage. So we have seen a successful case on market, which is the onshore PFM product was launched by Barings, the asset manager, and they use their own QFII to seed their PFM fund. And that one was launched at the end of 2020. Well, I would also want to quickly compare the QFII program and the other access channels. I think some of them may be covered earlier, the QFII versus Stock Connect. And generally speaking, the QFII has a larger investment scope. And also the QFII had its exclusive license and is no longer subject to any investment quota. Yeah, but Stock Connect, it's subject to a daily market quota and it's limited to A shares. But at the same time, but on the other hand, the Stock Connect trading would be relatively easier because there's no, license application process involved, and you can just open an account with your offshore broker. And for Bond Connect, it's quite similar. The Bond Connect or the CIBM Direct, they are limited to the RMB bonds products. But the QFIIs, they cover bonds as well as other asset classes. And then the QFII versus market access products, because in the past, and also currently, we know that some managers, in order to save the application process, etc., they use some market access products to gain the economic exposure to the A shares. But it's only economic exposure. They don't have ownership to the A shares, not as a registered owner, etc. And there will be some additional costs involved. And another point is that, from a PRC regulatory perspective, the market access products always is not, encouraged by the PRC regulators, including CSRC and SAFE, because the regulators would encourage, all the foreign investors to have their own license or use other legitimate access channels to gain, their A shares interest. And then Swap Connect, which is also another brand new development, just launched a couple of months ago. So it's a new connect scheme, between China and the overseas markets. But the securities are generally related to swaps. Okay, I think that concludes my presentation today. I hope it offers some, additions to the what has been covered just now, and to give you a relatively, comprehensive picture of, what the QFII program would benefit your investments in China. Thank you.
Thank you very much for the introduction, which is definitely, educational. I have to say I was benefited a lot. And okay, all of our speakers has finished sharing. So I guess let's just move on to the QA session. And if you have any questions regarding just now, please bring it up in the chat room and our speakers can answer it. Okay, let me just go ahead and show on. All right, I saw there were already some questions, and Tom was asking, what is the cost before you start trading if it takes another year? Mara, do you want to take that one? Can you hear Mara?
Yes, so for the first question regarding to the cost, if you come to open the futures account and the bank account, it's no cost at all before you really trade it. So before you're trading, we have no cost at all. So that's why we said highly accommodate to the client to come to open the account at first.
Okay.
Yeah, so this is for the second for the first question.
And also there were audience asking, can I trade Shanghai metals, please? You want to take that one too, Mara?
Oh, okay. So I assume you are asking for the Shanghai Exchange Metals at this moment. We can trade the bonded copper in the international contracts, except for this. If you want to trade some metals else, we need to through the swap.
Thank you.
Yes.
And another question, if there's margin call, how long will it take to transfer funds from offshore to onshore? I assume Aris, do you want to take this one?
Thanks. For the cross-border fund transfer, actually that will depend on the all participating bank, because for example, it's USD. For USD, the remitting bank must provide instruction to its intermediary bank. So aside from the remitting bank speed, it depends on their USD intermediary bank speed. And as their intermediary bank might be different from our, like DBS China's USD intermediary bank. So the beneficiary bank's intermediary bank's speed also matters. So what DBS China as a QFII bank can do is just to tell the client that we haven't received the fund and ask the customer to chase its remitting bank. So only after the USD has arrived at DBS China, we could ask our operation to speed and process the credit into the account like in 1 to 2 hours. Hope
Okay.
about clarifies.
Thank you very much. It does. And another question was asking if the broker blows up, who would take the hit? I think I would just take that one, Tom. Basically, I would assume you were asking if your money was safe with the onshore broker in China. And if that's the case, I think your money will, your fund will being transferred from the custodian bank and to your futures trading account, and which is actually supervised by CIBM, also known as China Future Margin Monitoring Center. So your fund will be safe and is not going to be mixed up with the broker's own money. And the concept behind this is somehow similar to the relationship between SEC account and house account from an offshore perspective. But the difference is every one of the clients will have their SEC account and in their corresponding custodian bank. I wish I've answered your question, Tom. Okay, one last question. And in the case that a QFII invests local private FOF fund, and the FOF fund invests a local private fund, and the local private fund invests stock exchange shares, does the QFII have to report the holdings of underlying shareholding of the local private fund to CSRC?
I can cover this question. The answer is no. The answer is no. We as the QFII custodian bank just report your private fund holding to the CSRC, not the underlying shareholding.
Okay, thank you very much. And okay, so if you have more questions, please feel free to send us email at nanhuaoverseas@nanhua.com. Then that is NHOverseas@NAWAA.com, and we will get back to you as soon as possible. Okay, so there's no more questions. That's pretty much everything we would like to cover for today. And thank you very much again to all our speakers and audience. And thanks for coming, and we'll see you next time. All right.